So here's a fun one. Virgin Galactic, it's SPCE ticker, is just got a new CEO. So the former president of Disneyland, Michael Colglazier, is now the chief executive officer of Virgin Galactic. And then, of course, they've made a couple test flights. They had their second one recently, and then they have some agreements with NASA. So this is the news. I'm going to take a look at the balance sheet. All right, so we're at the SEC filings here, and they don't have a super current balance sheet, but we'll go take a look at their 10Q. Here we go, 10Q from May 6th. So they're still in, the research and development phase. They're getting pretty close to actually taking people to space now, though. And balance sheet here is actually pretty good. We have the total current liabilities here is about a quarter of the cash they have. So they actually have a huge cash pile and a pretty good balance sheet, which is interesting for, a company that is still in the research and development phase, and they're not making. Well, they have about 60 people that have signed up for space flights, like pre-ordered space flights. So they do sort of have sales, and they do sort of have a product that hasn't actually launched yet. All right, so it's SPCE ticker, it's Virgin Galactic, and this is suborbital space flights, which is pretty cool. The former president of Disneyland. So this is a kind of a tourist industry flight, and so it's getting affected for sure by the whole virus situation. But you can see here their whole early R&D phase was just floating around $10, and then they started running parabolically up right into the Feb 20, the virus and the Feb 20 liquidation crash here. And so it's pretty interesting that they were just running like hot parabolic right into it, and then it just kind of froze it. And it has, I suppose this is a decent rebound, from 8 to 20 somewhere is a pretty big rebound from the bottom here. But this is just it's a weird chart, the way that it just ran straight into the crash and just kind of got halted. But they've had momentum like the whole last year, kind of building, and it's hard to kind of pinpoint the trajectory that it would have been on or how much it changed here. But it does seem to be a pretty good chart. A little bit tricky to, I wouldn't want to draw a trend line all the way from back here just because it's kind of crazy. But if we just come up to here, we're already getting a bit of a trend line, and this news is getting received well today in the trading. Let's take a look at it. Yeah, so it got like a tiny little parabolic reversal on the pre-market, and it's just been driving up into actual day trading today. So this is the type of chart that doesn't usually parabolically reverse kind of back down where it came from. From the looks of it, I would expect this thing to flag out a little bit today, and then potentially take a couple days to kind of peak on this chart, what it looks like here. So yeah, this is a pretty decent looking chart, and then it looks like we have pretty good support, coming into this news blast. It was already picking up a little bit off of the trend, and this is a big one. So just technically, and this is not investment advice, probably want to look for a steeper trend line. So I would expect this news blast to settle back out in the next day or two. It may come back down here today, but I think it's more likely that this thing wobbles a little bit and goes up a little bit more before it kind of settles out. And it would probably settle back out onto a trend line, something like this, and pick it up. And then from there, it can kind of bubble and bounce along on a higher trend line. Potentially, that's what I think would happen. And this could be a pretty good chart. We're already getting a kind of a solid trend line, and potentially we already have a line here to work with on a higher level trend line. And so this is a small kind of a bubble looking trend line that can be pretty good for technical trading, for day trading or swing trading, or even, these guys are headed towards actually launching literally into suborbital space with passengers. And so this, this isn't it is sort of flight and tourist industries that are getting hit really hard right now, but this is for very rich people, and it's kind of a novelty. It's kind of a novelty thing. It's not like the business travel kind of thing that's like crushing the airlines right now. This is completely novel thing for wealthy people. So I don't know. It's not really in the same sphere as the other airline companies in the general travel industry. So yeah, I think this is a pretty interesting one, and I guess just kind of on the day trading outlook here, I'll just see if this thing starts to get out into a pennant or a flag here, and if it does, then look for a higher target, for a sort of a day trading short position. I think this one looks like it's going to flag out from what it's doing so far, and then as far as a long for a swing or a longer term hold, I would probably expect a few days for this thing to kind of settle out, and then if it picks up a trend line, something like this, around 20 somewhere, and finds support, if it finds support in this area here, then this could be a really good trend line to trade off of. This is a pretty cool one. All right, so that's Virgin Galactic. Let's take a look at the S&P. And it's just a little weak today, I guess. Not much is going on. So the volatility has popped up a little bit, and we started getting a little more wild movements. And then you can see, we've been swinging around in this expanding zone, and now we've crossed over and we're around the top edge of the zone, and you can see these kind of gap movements all around the edge here, around this trend line, and back and forth and back and forth. And this, well, if it goes down, it could pretty easily gap down below this line again. That would not be too surprising. We have resistance up here that it's gotten rejected off a couple of times. So in order to get, it still has quite a bit of overhead resistance. So this is this area here around 30 to 35, somewhere around here is the previous island top back here. Yes, we have our previous island top back here that rejected off of this trend line. And so right around in this zone, it rejected twice out of here. So that's a pretty decent rejection so far. So for the bulls, you got to get through this area that's been rejected a couple of times, and then the next target is up here where we're underneath this 2-year bull market support line still. And so this is a key area. Like this island double top area is a pretty key area that it could reverse down, and then underneath this long-term trend line is another key area that it could reverse down. So this is not a lot of upside right here for the bulls. This is a dangerous area until you get up above here and get out, find some support over the next couple of weeks. If it gets up here, then that's real bull market territory. right now this is dangerous territory. Getting to the top edge of resistance that could get knocked down pretty hard from here. Let's take a look at the momentum, and then on the downside, we have a little bit of resistance here and here along this trend line where we've been wobbling around, and then the bottom of this island top has been getting some action, but these aren't super strong bearish resistance areas. If it does pick up bearish momentum and break down below this area where it's been bouncing down here, like 31.25, somewhere down here, there's not a lot of resistance to get to here. If it breaks it, then there's really not much resistance until you get all the way down here. So I think let's check the momentum right now. I think the odds of it trying to push up are more likely, but the size of a move down is way bigger from here. There's not a lot of room to move up right now. And it looks like the momentum is slightly bullish. We're in bull territory for quite a while here on the medium term chart. This is daily candlesticks, kind of couple month outlook. We're on the bullish top half of the momentum, and there's a little bit of divergence, so it's still a little bullish. And then let's zoom in. This is kind of a 2-week outlook, and we'll get in closer. And so it's bullish, side of the chart, but making a move down. And then as we get in today, it's kind of just stalling out in the bearish territory. And then I guess just right now it is just kind of stalling in the bearish territory. Yeah, so the momentum is not making a big indication of a move right now. It's just kind of wobbling around in this zone. So this will be a pretty interesting spot with resistance above and below, several resistance zones. So this isn't a spot that has a particularly good trade setup, but there are two pretty dangerous reversal areas, and we just bounced off of one of them. So it's possible to get a continuation to the downside here. And if it breaks, it needs to break down all the way down here, 3125 kind of area, before it could pick up a serious move down. And then in that case, in the bearish case, if it finds a reversal point here, like these tops here is one reversal point, and then this kind of spot up here is another reversal point that I would be looking at for sort of the last chance for a big bearish move before it actually gets out into a bull market. But I think the Qs are going to be, NASDAQ and the QQQ are going to be a pretty good thing to look at to see if these start breaking down. That could lead an actual move down. And so these look like they may want to move down, but they haven't broken out of the channel or anything now. This is still above the crazy bubble support line it has been on. And so I'm not getting a signal from that yet. Let's check out the dollar. Dollar has been breaking down. Let's see what it's doing. Yeah, it's just kind of wobbling. So, this is a long-term, like 10-year or something, bull market line, and it's just kind of at support now. And so, for me, I'm not going to be considering the dollar as being breaking down until it gets below 94, somewhere pretty far away from this super long-term line. But as for now, it's just still kind of wobbling, not doing anything too crazy. And then the bond spread is the yield curve is still flattening out a little bit. I've been looking at the 10-year yield. That one's been moving a lot, just to kind of see how the inflation indicators are looking. And so this still looks like it's trying to break down a little bit. So, I mean, if these yields break down, that's a not good for the market. So, I mean, right now it looks like the dollar still is holding up. The bonds are not, neither one is really breaking down or up yet. So the momentum is weak. So there's really not a lot of signals on which way it's going to trade. So I guess just the general idea here is that the general momentum is up. So I think the likelihood that it goes up is higher, but the distance that it could go down, it's probably like a 60% chance it goes up, and the target is here. And it's just not that interesting of a trade up here, because if it does reject from here or here, the downside is pretty big to this area. And so it's not, what's the put call spread doing? It's not really a great spot to take either position right now, I don't think. I mean, the asymmetry is favoring the bears, but it's not looking like a, yeah, people are putting on some shorts a little bit now too. So, I mean, usually when you get an actual big bearish reversal, it's going to be when everybody is going long and doing calls. Like that last big move we had down, we had record call ratio. There's something like 4 million calls or something, and the ratio was like all to the calls. Like no one was shorting. So this to me does not look like a good spot to short. So this is probably a little bit more bullish, but not huge upside. Just resistance. Before it gets interesting for the bulls, I think you just got to get out of this kind of area here where it's still dangerous. Yeah, so that's kind of the look for the midday trading today, and then we should be getting the balance sheets and everything in. It'll be after the trading day closes, but it usually comes in pretty soon after. And so that'll be interesting to see, because for now, this whole crazy choppy sideways area, the Fed balance sheet stopped expanding and has actually started contracting a little bit. They've been taking money out of the swap lines and out of the repo markets, but they're still doing a little bit of bond and treasury purchases, but it's pretty minimal. I mean, they have like $750 billion allotted for bond purchases, and they have done less than 10 billion of that. So it's a tiny amount of what they're prepared to do. Have they done yet? And I don't think there's much of a reason for them to do more until we run into a problem. And so I don't know if that would be really forecasting a problem, but it is. I mean, they're ready for one. So I don't know what they're seeing or what they're prepared for, but I know a lot of the international banks are in kind of a lot of trouble now, and the banks have been stocking like huge cash piles to handle a bunch of defaults. And so, like, if that was all going to happen soon, that would be a really scary kind of thing for the markets. But the way that the governments are just kind of, buying bonds or bailing out companies or pushing off debt payments, it looks like it could drag out for the next 3 months or the next 3 years. I don't know. They're just really trying to drag this solvency situation out longer, and then that gives a lot more time padding for the worldwide pandemic to sort of play out a little bit more. So I think that the liquidity phase, I think the whole thing happened. It happened in like just a month. I was expecting more of a liquidity follow through here, but I mean, I think we got the entire liquidity contraction in just one shot here. And then I think just to kind of break it up into cycles, like I was looking at cycles over the course of the whole year, but we've gotten cycles over the course of just like a month or two at a time here. Like this whole area here is just one big contraction cycle. And then it looks to me like this was the expansion cycle here. And then we've gone into a stagflation cycle now. And I think we might be getting another stagflation cycle. So stagflation, you get a little bit of a push usually at the beginning of the cycle for an expansion of the monetary system, but it's a down growth cycle, so it usually goes kind of up a little and then gets weak. And it looks like we got probably a whole kind of stagflation cycle here, and it looks like we're probably doing another one now. So we're getting like an early kind of push up, and then it should get just kind of sideways or weak again. That's kind of what I'm expecting here, is another stagflation cycle. And this was actually like a growth expansion cycle for the second one, a contraction, a growth, a stagflation. That's what I was looking at when we were getting this drawdown here. But I was thinking that these cycles are usually like 2 to 4 months each, and the time has gotten very accelerated on all of these things, where instead of like 2 to 4 months, it's like 1 or 2 months for each cycle. And the volatility is super high and the timing is speeding up. So the market is pretty wild right now. But that's kind of the cycle outlook that I have now. I think we're just in another stagflationary kind of cycle here. And it could just kind of get boring. But I don't think there's huge like growth potential right now, and they're not expanding the balance sheets like crazy or anything right now. It's just like a really weak expansion and then just super weak growth. And that's about it. It could be slight up growth possibly, but it just seems like a really weak monetary expansion with weak growth. And this is still a bear market model here. And so it just looks, it looks like we'll get more of this kind of activity that we got in this zone here over the next few weeks. So I've had kind of the idea that we're gonna double tap this line here from underneath. This is the 2-year line that goes back to the bottom of 2018. And so we already got a really good reaction, and then we swung all the way back up and got a good rejection off of it again. And if you look at a bunch of bubble models like Great Depression, the Nikkei, like the .com, Nasdaq bubbles, you can draw these bull support lines on the way up in the bubble, and then on the backside of the bubble, you break and you back test these lines, and you usually like swing out and you'll test it again. And it's pretty common to see a double tap of a line before you move down off of it. And so in the bearish case, I think that's just like this double top here is a good look, or the rejection off of this line is like a really strong thing that could actually put it below this line. That's one spot where I think it could really make a move down. But that would probably be at the end of, like, if we got 2 stagflation cycles here, we need to take a look at what the next cycle would be like. And the financial data, like there were financial data outlooks coming into the crash that were suggesting these kind of cycle setups, but that usually, all of that would usually take a whole year or more, and it's all happened in less than a half of a year. So I guess that'll continue. I think we're gonna have high volatility in these faster cycle kind of changes here. But yeah, I don't think we're headed for another like big contraction cycle right now. But I'm gonna try to figure out the kind of cycle research that I was doing previously, and see if I can find what the next cycle might look like, and see if we're still in a bear market model. Because right now I just kind of have a stagflationary outlook for the moment, and it's still a bear market model. And if we get up here, that changes the model, and breaking down would not change the model. But But yeah, we'll have to see kind of what the expansion and everything looks like over the next couple of months. So yeah, that's the outlook. I still don't like much of a trade setup here. If it does get here and the put ratio gets really bullish, that could be an interesting place to short, sort of as the last spot to short in the bear market model, when nobody will be wanting to short it. It could be kind of a ballsy place to short before it gets into an actual bullish kind of setup. And what's happening in the other sectors? So the small caps are still kind of weak. Maybe they're up out of sort of a little trading zone here, but these have been trading weak, and they came weak into earnings, and now that we're getting bad earnings results, it's popping up a little bit, which is kind of funny, but it's not that weird. And the financials did the same thing. They kind of traded down into the earnings season and then reacted positive to earnings so far. And I mean, I don't think that more of the same earnings is going to be super bullish or anything like that. But that's just kind of it kind of was pricing in bad earnings, and then they're coming out a little bit better than expected so far. And so you just get a little bit of an adjustment up here. And that's pretty much what I'm seeing in these sectors. But these, the small caps and the financials are still the sectors that are the worst in this type of economy. Super low interest rates are bad for financials. All the bankruptcies and solvency risks are really bad for the banks. And they're obviously bad for the companies that are going bankrupt as well. And it's these IWM, like the Russell 2000 companies, that are not going to be getting bailouts. They're not going to be getting bond purchases. They have the most exposure to, these solvency risks, and it's going to be harder for them to get loans, that sort of thing. So, I mean, that's over the next whole year or something like that, as we start getting more and more bankruptcies and defaults and things like that, that these should be kind of getting weak. And then want to see if the infotech sector that's been leading is going to continue to separate farther and farther away from the rest of the market, or if it'll come down. So, I mean, yeah, if this thing does kind of turn over, let's throw a line on here, because there's just been a really strong support line under this run, and this is pretty crazy run. And so we're getting close to the line. So a pullback of a day or two, it's gotten a couple day pullbacks several times. It's not really that big of a deal. We'll see if it picks up support here. If it does, it'll probably do a whole nother bounce up this trend line. But if it does break down under here, that gets really dangerous for the entire market. And, a little bit of a move down here, it doesn't have to move down huge, but if these start coming down, everything can come down with it. And so I think there is a lot of risk here. What's the volatility looking like right now? Yeah, same kind of thing. So yeah, as the stock market has been just kind of chopping sideways or a little bit up, the volatility has been on a pretty strong up trajectory, and that's dangerous as well. So yeah, I see a lot of danger for a potential move down, but I don't think it'll be a long-term move down unless these infotechs really break down. So that's what's happening now. And then later tonight after market, I'll come out with the balance sheets and kind of get the liquidity outlook. But as for now, it doesn't look like there's a whole lot of liquidity or anything like that pumping the market. Just the liquidity that already came out over the last couple of months, still doing whatever it's doing. But yeah, that's the look, and not investment advice. Happy trading, like, subscribe, chat, all the good stuff, and cheers.